Hey all, good morning and welcome to ShareTreck. Today is the 1st of June 2022 and this is our daily update. Let's get started. I do seem to have some gremlins in my system. I went back and heard my previous video on Tesla issues as well as the last daily update, and of course there was an echo. Thanks in for letting me know. I have recalibrated everything. I've checked it again. This sounds good, so it's going to be my best practice to check my video before I upload. So thanks for that, and sorry for all the inconvenience. So with that said, let's get started with the news items for today. The first news item I have for you is out here from phys.org. It says neuroscientists expand CRISPR toolkit with new compact Cas711 enzyme. So that's our very first news article. The gist of the news article is that we are good at miniaturization. Remember when we had the first PC, it was huge, and now we have got the iPhone, which is essentially a PC which is in our palm, and it has got much more capability than the very first PC, which could probably be described as a mini appliance. It was quite big. The same thing is happening to CRISPR toolkit also. Last year, researchers at MIT's McGovern Institute for Brain Research discovered and characterized Cas711, the first CRISPR enzyme capable of making precise guided cuts to strands of RNA without harming cells in the process. Now, working with collaborators at the University of Tokyo, the same team has revealed that Cas711 can be shrunk to more compact version, making it an even more viable option for editing the RNA inside the living cells. This is a great development. A cell contains its DNA for life and passes an identical copy to daughter cells as it duplicates. So it is inheritable. So any changes to the DNA are relatively permanent. However, RNA is a more transient molecule transcribed from DNA and degraded not long after. So RNA doesn't last too long. Therefore, if you modify RNA, the effects can be temporary. So there are lots of positive about being able to permanently change DNA, especially when it comes to treating an inherited genetic disease. But for an infection, an injury, or some other temporary disease, being able to temporarily modify a gene through RNA targeting makes more sense. Imagine you could have an RNA gene therapy, and when you take it, it modifies your RNA, but when you stop taking it, the modification stops. This is really just the beginning of enabling that kind of a tool set. So this is an exciting development, and besides, even the latest copyright victory for CVC in Europe is preconditioned by not modifying the germline or not making any CRISPR related changes permanent that can be passed from parent to child. So this is compatible with that decision. A good development for us. The next item that I see here, I think I mentioned this yesterday, but CVC has won their patent battle in Europe. They have managed to overcome all the challenges, and the only change that has been made here in the ruling is that CRISPR cannot be used for germline modification. So any CRISPR therapy that is done should not be inheritable to the progeny. So that's the decision here, and I'm pretty sure that there'll be more efforts to make sure that for inheritable diseases, those modifications can be made, but that's going to be a long drawn-out battle with a lot of safeguards and other things built in. It will take a longer time, but for right now, for the process of going forward to monetization, these developments are key, and we'll have to wait and see what happens in the US with the federal appeals lodged by CVC, Federal Court Appeals. And if CVC wins there also, then we have a clear IP regime across the globe. If CVC loses there, then the stage is set for a compromise between Broad Institute and CVC. We'll see how the landscape turns out. The next thing is I came across this interesting article on CNBC. It talks about Wall Street veterans offering 3 trading strategies for investors worried about recession. So basically, if I scroll through this article, in it, Morgan Stanley is talking about investing in healthcare, real estate, and utilities for investment, as well as they recommend going for investment grade bonds. Whereas when you look at Wells Fargo recommendation, it's a very broad recommendation in which they are saying you need to have patience and you need to perform diversification, because bear markets will last about a year. So don't be in a rush to put all your capital into the market right away. So that's the gist of this article. I put all the links to all these articles in the description so you can have a look at it yourself. That brings us to an end of the news roundup for today. And of course, there are news articles pertaining to Russia, Ukraine. There are news articles pertaining to the COVID lockdown and other issues pertaining to China. There's a whole lot of other news articles, but I prefer not to put them all in here in the interest of keeping this video short. But all those risks are also going to apply. Of course, we have got the labor shortage and inflation issues going on. But I think there could be some kind of positive in the horizon for our inflation issues. So here is a table that I came across during my research. It's based on the Q1 2022 SEC filings, and it talks about the amount of inventory that is in excess in many of the big retailers like Dick's Sporting, Walmart, Williams Sonoma, Dollar General, Home Depot, Costco. Most of them have got a high level of inventory, as high as 47.9%. Therefore, there is a whole lot of sales that are taking place, like Memorial Day sales and others. And it's expected that there's going to be a deflationary impact because these companies cannot afford to keep all the inventory in their warehouse, and they would like to move their inventory so that there is circulation of cash and they have more latest goods in place. Another thing that seems to have happened is that they had potentially mistaken the amount of demand that was experienced during the lockdown, and they've ordered a whole lot of inventory which doesn't seem to match with what the people want to buy at this point of time. So that's also another reason why there are heavy discounts. So if you're staying in the US and if you're looking at any of these shops, just go in and have a look at how much of sales they have got, what percentage of discounts they are giving, especially in big items like refrigerators, washer dryers, lawn mowers, those kind of things. You'll find some kind of discount in most of these stores. So all this is going to translate into a lower CPI read. It may definitely have a downward push on the CPI when it comes up next, in my opinion. Let's see what happens. So this is the chart that I wanted to show you. Now, with that said, it's time for us to take a quick look at Nasdaq and the indices and see where they are moving. It's around 8 o'clock in the morning. We are recording this early. Let's start with the Nasdaq futures. If you look at Nasdaq futures out here, you can see that Nasdaq future is positive. It's up 0.34%. It's standing at 12,690 region. And each of these candles here in our chart is a one-day candle. And as you can see, yesterday was a doji candle. It was indecisive, but in a bearish way. Today is again a formation of a doji candle. We'll have to see whether we are going to continue our upward movement, because we are still within the body of yesterday's candle. Our MACD is bullish, so that's a good sign. Momentum is also above average and pointed out. That's also a good sign. So I think Nasdaq futures are definitely bullish. Let's look at what indicators are telling us out here for our Nasdaq and S&P 500, etc. So I'd like to first start off with the put-call ratio. The put-call ratio is, as of yesterday, it was just slightly below neutral. So I'd still call this neutral. We don't know what is happening today. This was yesterday's candle. As long as we are not above 1, I'm happy with that. So I wouldn't call this as bullish or bearish. I'd just call this as neutral. Let's go and have a look at US oil. So US oil is forming a kind of doji candle out here, a very small candle. This is the candle for today. And yesterday we had seen a drop in US oil. It was kind of erasing of what happened the day before. The day before it had gone up, it came down again. So it seems to be consolidating somewhere out here. So if today's candle was to develop by going upward right up to this level, and we have 3 candles of the same height, then it's a sign of consolidation. It doesn't make much difference for the market, because it will mean that we are range bound with regard to oil. So our range boundness will persist in the stocks also, as it was yesterday. So there'll be a little bit of plus and minus in the stocks, but they won't make any major moves. So that's how I would look at this. So we are not getting any clue from US oil at this point of time. Ideally, I would like US oil to fall. If you go to US dollar index and have a look at it, now we have converted this line of resistance from before on this bearish channel into a support, and we have the candle for today out here. This is 1st of June. This is the candle for today, and it's being constrained by the 9-day and the 20-day exponential moving averages. We have a bearish MACD which is trying to move towards the signal line, and we have a momentum which is below average but trying to pick up. So US dollar index tells us that some money is definitely moving away from other assets and getting into the US dollar. So we should expect to see that Bitcoin and gold will be in the negative, and that should potentially apply to Nasdaq as well, but there may be other forces at play for Nasdaq because our PCC as we ended yesterday was neutral. So I would not yet say that the opening is going to be bearish for Nasdaq. So with that said, I would like to have a look at the QQQ and see what QQ is telling us. So we have this line of support out here, which is helping QQQ, and we have stayed on it. And if I also take this line out here and measure what happened in the past we went all the way up here, we came down, we hit this line of resistance again. So one thing is very clear, this diagonal green line is a line of resistance, and we are going to have a reckoning when we approach that. But if I take this bar from there, bring it out here, and put it here as a measurement stick, you will see that we will go all the way up to here, and we'll continue to respect this line of support. We have a doji candle here for 31st of May, and it has a little bit of a negative out there, still supported by the 20-day exponential moving average. And for today, we can see that the pre-market is opening at 309.70, which is just below this line of resistance of 310.45. So our first resistance is going to be 310.45, and our pre-market is already positive 0.45%. So if this persists, then we are likely to break through this first line of resistance and convert this into a support. Then our next resistance is going to be this line out here at 319.31, which is going to be a very strong resistance because it's combined with the 50-day exponential moving average, which is this particular line, and the 50-day exponential moving average currently sits at 319.44. So that's going to be a very strong resistance for us. When we look for clues in the MACD is bullish and moving away from the signal line, and we also have a momentum which is above average, but it is flat. So we do not have a clue where it's going to go. But based on the pre-market action, assuming the pre-market participants know what they are doing, we can say that we are going to have a bullish open. But after that, what's going to happen is anybody's guess, because we have a doji candle here and we could probably go down, and if we did go down, we are likely to hit a support at 303.30. If we went down further, we are going to have a support with the 9-day exponential moving average, which is sitting at 299.83, and if we still fall down further, then we have a support at 296.02, which is this diagonal line that we have here. So that's how I would characterize the market that's going to happen today. And if we were to go and have a look at S&P 500 to see what S&P 500 is doing, we have a similar setup out here. I'm going to draw a few trend lines here for you to show the bearish channel that we were in. So this is the bottom of the bearish channel, and we can have another channel at the top which shows the upper extent. And now S&P 500 seems to be one step ahead of Nasdaq and slightly stronger than Nasdaq. And what S&P 500 is telling us today is that we have a doji candle on 31st of May, same way like we had for Nasdaq. Our pre-market is up 0.39%, that is $1.65, and we are at 404.65 pre-market, and our resistance out here is 415.60. Same setup like what we had for Nasdaq, but we have had more consecutive days of green candles out here, whereas in Nasdaq we didn't have that. And today's candle is most likely to break through this resistance of 415.60, assuming that the pre-market participants know what they are doing, and the indication is going to be that it's going to be a bullish opening for the market. But what happens after that is suspect, because it will depend on other stimulus that will emerge when the market starts trading. Our MACD is bullish and moving away from the signal line, but you can see that the momentum, even though it's above average, it's pointed downwards. So there could be a potential for us to lose the momentum once we start, and which can drag the markets down. So a positive open seems to be in the cards. Right now it's 8:27 when we are looking at all these numbers. So at 8:27 it seems that we're going to have a bullish open, probably the bullish first hour. Everything should start becoming clearer around 10 o'clock to 10:30 time frame, which is when the professional traders I think will start placing their trades, and that will determine where the market goes. The first hour is usually a mature hour, and there could be slaughter happening at that time. So your cues will come from the 10 to 10:30 a.m. time range. Now let us go and have a look at our cryptos as well as gold and see what they are telling us. And true to expectation, we can see that today's gold candle out here is below our original support from yesterday, which was at 1841.26. So I'm going to mark this as a resistance, and you can see that the MACD is, though it's bullish, it's trending towards the signal line, and also momentum is below average and dropping down, which means that money from gold has found its way into the US dollar index. And the same thing seems to be happening when it comes to Bitcoin. Bitcoin is also slightly down today. It's down minus 0.62%. It now has a resistance from the 20-day exponential moving average, but it still has support from the 9-day exponential moving average at 30,610. And subsequent to that, there is support at 28,993 for Bitcoin. And I think once Nasdaq opens, Bitcoin is likely to follow the cue of Nasdaq. And again, I think the money has been taken out of Bitcoin and put into US dollar index. If these two trends seem to indicate what's going to happen for Nasdaq, then I would say that Nasdaq is also going to be bearish today. Money from Nasdaq is likely to go back into US dollar index. So that's my prediction for today. With that said, I think it's time for us to go and have a look at our genomic sector stocks. So here we have the genomic shares. I've sorted them as per worst performer on the top, and we have DNA at the very top. It had lost 4.05% in the last trading session, and if you look at the chart also, we can see that there was a red candle. My opinion is that there's going to be a dead cat bounce in the morning for all these stocks, and we'll see a sea of green. And based on what I have seen for all the other indicators, it seems that later on in the day there's a good chance that all the gains made in the morning might be more or less given up, and we might end up in the red by the close of the day. That's what I think. That's my interpretation of everything that I've seen so far. I don't know what you guys think. You have to apply your own analysis. Now let us look at DNA itself, and out here this is a diagonal line. Each of these candles are a one-day candle, and our next resistance is going to be at 3.20, and you can see pre-market we are already at 3.09. I think it's just went flat at this point of time while I was just looking at it. So there is no cues out here, though it was briefly positive. I'm assuming that we are going to continue to respect this diagonal line of support, in which case it is logical for us to break through 3.08 resistance, and probably 3.20 will be the limit for us, because 3.20 is a very strong resistance. It's a horizontal resistance which is also combined with the 50-day exponential moving average, which is this fluorescent blue line. So it's going to be a strong resistance to break through. Our MACD is bullish, but you can see that the momentum is pointing downwards even though it is above average. So there's a good chance that we might really test this diagonal line strongly, and maybe even fall below it and start some kind of a movement downwards. So that's on the card for DNA. Bluebird, it's down minus 2.44% as of yesterday, absolutely checked by the 20-day exponential moving average. If you see this candle here, you can see that it has been pushed down. It went right to the 20-day exponential moving average and got pushed down, and it closed within the body of yesterday's candle. It does not have the support of the 9-day exponential moving average. 9-day exponential moving average is actually a resistance at this point of time. But if you look at the pre-market action, it's up 0.03 cents. That's around 0.94%. So we are again going to challenge the 20-day exponentially moving average today, and if we are able to break above it, then our next line of resistance is going to be at 3.90, which is this horizontal line out here. But by the looks of the indicators, it doesn't seem like we're going to break through over that. MACD is bullish, but you can see that the momentum is below average and pointed down. So momentum does not seem to be in favor. I don't know what the pre-market participants are thinking out here. To me, it seems like we are on a downward movement. So I'm looking at Bluebird and then PSEB. PSEB is down minus 8.75%, and as you can see, it has come back into our consolidation range. It went up a day before, and yesterday it managed to come back in again, and it's staying within these two ranges for today. And you can see the momentum is already down, even though MACD is bullish. So I don't think anything great is going to happen for PSEB today, even though pre-market seems to be positive. We might go up a little, but we will come down from here. That's my prediction. For PSAB, I'm going to look at IDNA for overall guidance. When I look at IDNA, I can see that we are still range bound and we are still respecting the 20-day exponential moving average, and we also have a support out here, which is this diagonal line, and for today this support happens to sit at 27.66. so I'm putting a boundary of 27.66 on the lower side and a boundary of 29.51 on the higher side, and there are no pre-market trades. So I think that overall all of our genomics shares, many of them are likely to get a dead cat bounce, especially the ones which lost a lot yesterday, and they are likely to lose those gains as the day goes by and end the day again in the red. That's my prediction. Of course, these are my personal opinions based on my interpretation of the charts and the indications. That's where I think it's going to be. So let me explain why I feel that it's difficult to predict the direction today. I had shown you the inventory levels of major retailers. They have got high levels of inventory which they are trying to liquidate. So when they give discount sales and all, they are eroding their own margins. So if the market participants are all aware of the inventory level, like we checked it out now, then they're going to have two thoughts in their mind. People who hold those shares are going to be thinking that the shares have to go down because the profitability is going to be hurt. These companies have got extra inventory and they are liquidating it and reducing their margin in the process. Therefore, those companies' share prices will go down. But people who do not hold those shares will be thinking that the consumer price index is likely to be pushed downwards because all these companies are going to sell their products at much lower prices, thereby reducing the inflation, and that should in turn make the Fed less hawkish, and therefore they would be bullish on the market today. So we don't know how much the market is aggressively looking for information and how they price in. And also there have been some new headlines today. I think Delta is saying that they are much more bullish about their business, and they are having increased fares, and they are still having full flights and all that. Now that's again a very bullish headline for the market. So without any of the underlying risk resolving, there can still be bullish sentiment here and there, because we are in a bear market and this is a relief rally happening in a bear market. That's how I'm looking at it. So the green that we see may not be permanent until we have seller fatigue, until all the risks that we have got are resolved. So that's the basis of my prediction today, that we may initially have a dead cat bounce, but later on we are likely to fall. I am assuming that the market participants will take a little while to discover the inventory news, and also to respond to the news from Delta Airlines. So with that said, I'd like to end my video today. Please press a like if you like this video. And if you're not yet a subscriber, why not? Please subscribe and join our community, and help us expand this channel for everything related to CRISPR. Thanks and have a great day. Bye for now.